Welcome back to our channel, financial enthusiasts. Today, we're diving deep into Comcast Corporation. Let's see why this company might be a hidden gem in your portfolio. Buckle up, because we're about to get nerdy with some numbers. Alright, let's start with the price-to-earnings ratio, or P ratio for short. Comcast's P ratio for the trailing 12 months is 9.19. Just to give you some context, the average P ratio over the last 5 years was a much higher 14.04. That's quite a difference, showing us that Comcast might be undervalued right now. And if we look at the forward P ratio, which is based on projected earnings, it's even lower at 8.31. This suggests that the market expects earnings to grow, making the stock potentially cheaper if those earnings come in as expected. But wait, there's more. We also have the PG ratio, which considers the company's earnings growth. Comcast's PG ratio stands at 1.06. A PG ratio around 1 generally indicates that the stock is fairly valued relative to its growth. So, Comcast is not only cheap based on earnings but also fairly priced when you factor in growth. Let's talk about ownership. Insider ownership is at 0.96%. While it might seem small, it's always a good sign when insiders have skin in the game. It shows that the people running the company believe in its future. Now on to returns. Comcast boasts a return on equity of 18.68%, a return on assets of 5.89%, and a return on invested capital of 11.17%. These numbers tell us that Comcast is efficiently using its assets and capital to generate profits. Nice. Earnings per share, or EPS, is crucial for understanding profitability. Comcast EPS is 4.09. But what's even more exciting is the projected EPS growth over the next 5 years, which is 8.66%. That's solid growth. Speaking of growth, Comcast has had a very positive evolution of earnings per share over the last 9 years, with a compound annual growth rate of 12.04%. That's a decade of steady growth. Free cash flow per share has also seen a positive trend over the last decade, growing at a compound annual rate of 8.08%. Free cash flow is crucial as it shows the company's ability to generate cash after accounting for capital expenditures. Now, let's talk about dividends. Comcast has a dividend yield of 3.3% and has grown its dividend at a compound annual growth rate of 11.29% over the last 10 years. That's pretty generous for income-seeking investors. Operating margin and profit margin are key indicators of efficiency. Comcast has an operating margin of 19.25% and a profit margin of 12.65%. These margins indicate that the company is good at turning revenue into actual profit. Looking at the revenue and earnings over the last 8 years, Comcast has shown positive growth. However, this hasn't been fully reflected in its stock price, as it has underperformed the market index VO over the last 5 years. When it comes to debt, Comcast's debt-to-EBITDA ratio is 2.52, and its debt-to-free cash flow ratio is 5.74. While these numbers show that the company does have significant debt, they are still within manageable limits. Now, let's talk about market performance. Over the last 52 weeks, Comcast's average price return is minus 7.62%. Not the best news, but it could mean there's an opportunity to buy at 52 weeks low. Comcast has a market cap of $148.43 billion, making them a big player in the telecommunications services sector. Finally, analysts predict that the stock price could reach $47.35 in the next 12 months, up from the current $37.58. That's a potential upside of 26%. Personally, I believe the fair value of Comcast is around $47.80, which is close to the analyst's prediction and significantly above the current price. This suggests that Comcast might be undervalued. So there you have it. Comcast Corporation looks like a solid investment with potential for growth and income. With its impressive financial metrics and the possibility of being undervalued, it might just be worth a closer look for your portfolio. Don't forget to smash that like button, subscribe to our channel, and hit the bell icon so you never miss an update. Let us know in the comments what stock you want us to analyze next. Until next time, happy investing!